Thank you very much. Well, with the bells tolling here in Brisbane, a very good afternoon, ladies and gentlemen, and welcome to Brighter Super's 2025 Annual Members Meeting. My name's Tim Cox, and I'm absolutely delighted to be your MC for today's proceedings. Before I begin, I'd like to acknowledge the traditional owners of the lands we meet on today and pay my respects to our elders past and present. We're proud to serve Queensland's 17 Indigenous councils, and we strive to provide positive outcomes for our members who identify as Aboriginal and or Torres Strait Islander. I'd like to outline the agenda now for today's meeting, and it looks like this. First of all, you'll hear a message from the Chair, John Smith, then the Fund's Year in Focus from CEO Kate Farrer, a performance overview from the CIO, Mark Ryder, and then, of course, a question and answers session. And following the Q&A, if you're interested, we have staff from the Brighter Super team in the foyer here to help you with any questions you might have. We're also delighted to have representatives from both Zurich and TAL Insurance, and one of our valued partners is here today as well, Mates in Energy. So please do drop by and speak with them about the important work Mates are doing, supporting the energy industry regarding suicide prevention and mental health. Now, in terms of housekeeping for the Q&A, when the session begins at around 1 o'clock, those of you in the room who have a question, please raise your hand and one of our team members will run a microphone to you. I'll then direct to the correct speaker here on stage to respond. And in the interest of time, we'll only be taking pre-submitted questions and questions from the floor. Now, for those on the live stream, please feel free to submit questions by clicking on the Q&A icon on the toolbar there. Your team will do its best to answer your question online during today's session, but if that's not possible, someone will follow up with you in the coming weeks. We've tried to incorporate some of the pre-submitted questions into today's presentation, and if you did submit a question prior to the AMM, whether you were attending in person or online, and we don't get to it today, rest assured we will come back to you with an answer in the coming weeks. So whether you're online or here in the room today, we really value your feedback. So if you're in the room, please don't forget to complete the feedback form that's on your chair. But if you'd prefer to fill this out electronically instead, if you scan the QR code at the top of the form, you can do it electronically. And for those online, you'll find a feedback survey on the toolbar at the bottom of the screen. The survey will include the opportunity to be contacted by a member of the team, should that be of interest to you. Before I hand over to our presenters, it is important to understand that the information and examples contained in the presentation are general in nature and have been prepared without consideration for your individual objectives, financial situation or needs. It's important when making decisions about your super options that you obtain the relevant product disclosure statement and consider your own personal circumstances. And should you need help with your personal circumstances, we have a team of financial advisors who are able to work with you to make recommendations on how to manage your superannuation, your investments and your insurance. So without further ado, I'd like to hand over to the first speaker for today's annual members meeting, the Chair of the Brighter Super Board. Would you please join me in welcoming Mr. John Smith?
Thank you, Tim, and good afternoon, members and guests. Great to see you all here. As Chair of Brighter Super and on behalf of the Board of Directors, it's my pleasure to welcome you to the 2025 Annual Members Meeting. This year is a special one as we celebrate 60 years of Brighter Super. Now, there is a member, Don, down the back who joined in 1967, so he was probably here about 2 years after we started, so welcome, Don. Our focus today remains unwavering, delivering personalised service, keeping costs low, delivering strong long-term returns, and empowering members to live confidently in retirement. I'll just start by highlighting a few of the key regulatory changes that occurred this year. First one, superannuation guarantee went to 12% on the 1st of July 2025, and that marks the final stage in a series of legislative increases over time. Also, from the 1st of July 2025, the lifetime limit on how much you can transfer into a retirement income stream, as well as the total super balance threshold, increased from $1.9 to $2 million. One thing that didn't change is the amount of contributions you can make to super without paying additional tax. So if you're paying contributions pre-tax, that limit is $3,000 per annum. If $30,000 per annum, my apologies. And if you're paying post-tax, they're non-concessional contributions, that's $120,000 per annum. One recent change that the government put through, and that's recently passed the Senate, is payday super. So this means now the new rules that come in from the 1st July 2026 requires super to be paid at the same time as wages. So that's important for members because you'll be able to grow your savings faster and keep track of your super more easily. On our part, we're working closely with our employers to make sure they can make that transition seamlessly. Over the past few years, Brighter Super has grown to become a sustainable and competitive fund that at the end of the financial year manages around $35 billion in assets for around 280,000 members. In recent months, that has grown to around 36.5 billion, and for nearly 350,000 members. With the growth in members partly due to about 68,000 insurance-only members arriving at Brighter Super on the 1st of October 2025, when Brighter Super became trustee of Zurich's OneCare super product. So while insurance-only members don't bring investment funds into the fund, their inclusion helps us spread costs across a larger membership base, keeping the fund efficient and delivering better value for everyone. On the 1st of January this year, we reduced administration fees for the 3rd year in a row. Since the completion of our mergers in 2023, Brighter Super has reduced administration fees by 40%. That reinforces our commitment to growing all members' retirement savings while delivering exceptional value and services. We are currently the 4th largest non-government financial institution in Queensland. This year, as I said, marks 60 years since the fund was founded to serve Queensland local government employees. But we're an open fund. So while we welcome members from our foundation industries in government, finance, electrical, energy, alongside the wider community now. Our legacy of putting members first has never wavered, as we remain committed to helping our members live confidently through every stage of life. If you're interested in having a closer look at the fund's progress and financial position, you can access our annual members report and annual finance report on the website. Like last year, the Brighter Super board consists of 10 members, 4 member representative directors, 4 employer representative directors, and 2 independent directors. Now, you may not recognise some new faces this year with the appointment of Cameron O'Neill as an employer representative director on the 4th of March, and Rebecca Gerard as a member representative director on the 1st of April. They replace Mark Jamieson and Jennifer Thomas, respectively. A couple other changes on the board since 30 June 25, with Corinne Butler joining us as an employer representative director on the 8th of July, replacing Teresa Dyson. Teresa since has been kind enough to work with the board as a specialist advisor to the Finance and Audit Committee and the Risk and Compliance Committee, but will finish up at the end of this year. Also on the 8th of July 2025, Ron Dewhurst was appointed to the role of Deputy Chair of Brighter Super. And Employer Representative Director Micheline Colopy was appointed Chair of the Audit and Risk Committee and the Risk and Compliance Committee and the Finance and Audit Committee. Over our 60-year history, we've seen and experienced economic shifts, market cycles, and regulatory change, and 2024-25 was no different. On the investment front, we saw investment volatility from the new US economic policies, creating uncertainty across many industries and many sectors. This was compounded by the conflict in the Middle East, impacting both oil prices and global market confidence. While this kind of uncertainty can be unsettling, our investment team carefully managed the impacts through our well-diversified long-term strategy designed to navigate market ups and downs. Throughout the year, our guidance to all members has remained clear and consistent. Stay calm, stay focused on your long-term goals, and trust in a diversified strategy built to navigate those uncertain times and deliver results over time. This approach led to strong performance for the last financial year, with the majority of our members benefiting from double-digit returns. Brighter Super's growth option returned 11.65% for accumulation members and 12.82% for pensions, while the balanced option returned 10.54% for accumulation accounts and 11.49% for pensions. Following the fee reductions that I talked about on the 1st of January 2025, Brighter Super's accumulation members who are invested in the default My Super option, and that is most accumulation members, now benefit from being among the top 5 industry funds nationally for low fees. It's a terrific outcome for members, complemented by a strong annual return of 10.89%. You'll no doubt be interested in more recent investment performance, particularly as we continue to operate in very volatile times. Mark Ryder, our Chief Investment Officer, will be updating you on the fund's performance shortly and giving his outlook for the financial year. "2025 also marks my last year as Brighter Super Chair. I was appointed Chair of LGI Super back in December 2016, following 3 years as an independent director of the fund. I'll retire my position on the 1st of December 2025 after 12 very rewarding years of service. I'm honoured to have led the board over that time and reflect with immense pride on our transformation into a strong, resilient and future-focused fund for our members. It's been a privilege to lead the board through a period of significant growth and change, including 4 successful mergers and our transition into a larger, more capable fund with all of the scale, experience and investment strength to help members achieve their retirement goals. With my departure, I look forward to handing over to incoming Chair Ron Dewhurst on the 2nd of December 2025 and have complete confidence that Ron and I will deliver a very smooth leadership transition. Then on the 1st of January 2026, Brighter Super will welcome a new independent director, Brendan O'Farrell, to the board. To you, our members, thank you for your continued trust and support. The board and leadership team remain committed to ensuring Brighter Super continues to be the fund that members can rely on to help them live confidently. I'll now hand over to Brighter Super CEO Kate Farrar, who's going to run through some of the highlights of the financial year. Please welcome Kate.
Thank you, John, and hello everybody. Whether you're joining us here in Brisbane or online, it is wonderful to have you with us for our 2025 annual members meeting. Today, I'm going to be sharing some of our exciting new services and initiatives that are supporting our members' superannuation growth and retirement outcomes. And I will also reflect, a bit sadly, on the departure of 2 leaders who have made an outstanding contribution to Brighter Super's success. Before I launch into the main part of the conversation, I would like to introduce my executive team, some of whom are here today, and acknowledge their energy and dedication throughout the year, and you may have met some of them outside. I'm incredibly proud of this team of talented professionals who in themselves lead an amazing team of hardworking people, always committed to delivering for you. There are too many achievements to mention individually, but I'm just going to pull out a few standouts. First of all, Lisa. I think you may have met Lisa earlier. Her leadership in further developing our flexible, tiered financial advice offer, which is helping to make advice more affordable and accessible for members. from super and retirement health checks, which are now both at no additional cost, to personal super and retirement advice, as well as partnering with Financial Advice Matters to support members' more complex financial needs. James's work, James is also up the back, on improving the services that members most use and value, like upgrading our member online to include pension account applications, online beneficiary nominations and financial hardship claims, as well as accelerating partial withdrawals and insurance claims processing. And finally, Raniki's continued focus on enhancing our online security and data protection. So earlier this year, several major Australian superannuation funds were targeted in a coordinated cyber attack, but Brighter Super wasn't affected thanks to our proactive investment in cybersecurity and relatively early adoption of multi-factor authentication. So the whole team, not just those three, but the whole team really, every executive has delivered outstanding results for our members this year with various product enhancements, service improvements and financial benefits. And I'm going to talk to some of those shortly. So please say hi to the team when you leave again. At Brighter Super, we work very hard to be right by your side and offer members unparalleled access to our experienced and expert team. Our daily interactions with members include in-person service and advice, educational seminars, workplace visits and attendance at community events, ensuring members have all the personal support that you need. A significant improvement to our education services based on member feedback was to expand our webinar program to offer more frequent, focused sessions that fit easily into members' busy lives. With a broader range of topics presented by our super specialists and financial advisors, most webinars are now 30 to 45 minutes long and are held either at lunchtime or in the early evening. All up, we delivered over 291 webinars, seminars and workplace visits in 2024-25, helping nearly 15,000 members with first-hand advice and service. We covered a lot of territory as well, including Brisbane, Rockhampton, Townsville, Gold Coast, Toowoomba, Cairns, the Sunshine Coast and Mackay. One of the things that definitely sets Brighter Super apart is our personal approach. So we have over 40 super specialists located across Queensland and available virtually, providing personalised support and expert guidance every step of the way. And we partner with over 1,700 independent financial advisors to provide tailored advice that meets diverse member needs. This year we also extended our relationship with our retirement advocate David Koch to champion member education and engagement by hosting events and sharing his financial wisdom and passion with members. And I have to say, Kochie is having an impact. We've seen a 37% increase in average attendance at events this year and increased intention to seek advice since Kochie came on board. So it's definitely doing what it was designed to do. With all of this focus on member education and engagement, Brighter Super was delighted to win Super Ratings' 2025 Member Education Award. This was well-deserved recognition of our team's outstanding efforts and dedications to the depth and quality of the education that we provide to members. Now I'm just going to turn to some more individual areas that we worked on this year. Investment performance. During the 2024-25 financial year, we successfully navigated a global market downturn that began in mid-February 25. The downturn was triggered by US trade tariff announcements, which shook investor confidence and led to a lot of volatility across global share markets. I'm very pleased to report that our investment options performed strongly, effectively weathering this period of volatility and delivering strong returns for members. By the end of May 2025, all of Brighter Super's diversified investment options, including our default MySuper option, had fully recovered from the downturn. And in the year to 30 June 2025, the majority of members benefited from double-digit growth. This serves as a reminder that uncertainty and market fluctuations are a normal part of investing. Our guidance during these periods remains unchanged. Keep calm and stay the course. This message holds true for all members, whether in the accumulation phase or drawing on a pension. Lowering fees. As John mentioned earlier, on the 1st of January this year, we lowered administration fees for the third year in a row. So since the completion of our mergers in 2023, Brighter Super has reduced total investment fees by 40%, helping ensure that members have every opportunity to maximise your retirement savings. Members can unlock even greater value with the partner linking feature that we also introduced. This allows members to link their partner's eligible Brighter Super account so that both members can take advantage of a combined administration fee cap of $650 per financial year, with the administration fee calculated on the total balance across all investment options except for MySuper. Member services. Building on the successful mergers, we've been able to place more focus this year on expanding our suite of products and services. Key outcomes and initiatives in 2024-25 included simplifying claims processing for death benefit claims up to $10,000, reducing paperwork and dramatically speeding up payment times, enhancing claims tracking and management for death and terminal illness claims, and providing frequent progress updates to claimants, which is really important to work on our communications, and changing the fund's trust deed to provide greater certainty to potential beneficiaries and also improve timeframes for death benefit claims decisions where we don't have a valid binding or reversionary death benefit nomination from a member. And thanks to valuable member feedback, we introduced a range of new features and improvements to Member Online, including faster payment processing for withdrawals, online pension account applications, helping to reduce form completion errors and speed up processing times to just 1 day, viewing, changing or cancelling insurance cover, nominating a non-lapsing binding beneficiary with no requirements for printed forms or witnesses, claiming a tax deduction for personal contributions, and making a financial hardship application. In 2024-25, we received over 26,000 requests from members through these new digital options, so really great take-up. The ongoing improvements very much underscore our commitment to enhancing the member experience and streamlining our processes to be faster, more accessible and more personalised. Building retirement confidence. Brighter Super's focus on delivering value and confidence has earned national recognition, including recently being named one of only 6 funds in Australia, in fact equal second, to receive ChantWest's Epic Retirement Tick, awarded for excellence in helping members transition smoothly into retirement. This recognition reinforces that Brighter Super is built for retirement and ready to support members through every stage of life. A key ingredient of our retirement focus is the Retire Easy pension, which features pre-selected investment and payment options that can provide pension members with a stable, regular income in the short term and savings growth over the medium to long term. New pension account holders could also be eligible to receive a retirement reward, which is paid automatically when members transition from a Brighter Super accumulation or transition to retirement account to a Brighter Super pension account, with a maximum of $16,000 payable on a transfer amount of $2 million. For the 2024-25 financial year, we paid almost $7 million to 2,635 eligible members, a significant increase on prior years as more members became eligible for the reward. And on strengthening advice, we've made significant steps in strengthening our advice services for members. We believe every member should retire with the help of financial advice, as it can make a real difference to retirement outcomes. That's why we're making our advice services even more accessible, affordable and easy to navigate. Over the coming months, you'll see a number of improvements, including simpler service names like Super Advice, which we used to call single issue or intra-fund advice, and retirement advice, which we used to call scaled or comprehensive advice. We think this makes it easier for members and their partners to understand your options and find the right support when you need it. This includes supporting members with more complex needs who may require financial advice outside the fund. And one of our key priorities has been to strengthen our ability to work with external financial advisors, or IFAs, as they're commonly known. We've also introduced a new advice coordinator role to help connect members with the right type of advice, They'll help collect information, book appointments and guide members as you prepare for your advice sessions. Now, in great news, from October 2025, the $330 fee for the retirement health check has been removed, making it available at no additional cost, just like the super health check. We've also introduced a new fee structure that will reduce the average cost of retirement advice by around 47%, with the option of fees payable directly from your super account. These changes are just the first steps in making our advice services even more flexible, so you can feel confident and informed when you're planning for your future. Last month, we were delighted to launch a new advertising campaign inspired by our commitment to helping you to retire with confidence. Set to the uplifting anthem I Can See Clearly Now, the campaign portrays members relaxing in red hammocks, gliding across iconic Queensland landscapes, supported by Brighter Super's new signature red balloons. The campaign captures what Brighter Super stands for, right by your side. The red hammock, carried by red balloons, symbolises the confidence, clarity and peace of mind that can come from being supported by a fund that really cares. Now, whilst we take great pride in sharing our story more widely, we're doing so responsibly. Brighter Super's marketing and advertising spending remains well below many others in the industry, so you can be confident that we're promoting the fund carefully whilst continuing to deliver strong value. You'll see the campaign on free-to-air and on-demand TV, radio, billboards, YouTube and social media. Please keep an eye out for the red hammock gliding across some of Australia's most beautiful landscapes. We're now over 12 months into our commitment to Queensland's growth and delivering our Queensland investment strategy, investing a further $500 million in Queensland on top of the $1 billion that we held in assets across the state as part of our commitment to supporting members where they live and work. In December 2024, we appointed global asset management firm Barings to execute the first stage of our strategy. Under that mandate, Barings was tasked with deploying $100 million in capital into mostly industrial property investments across a broad geographic spread in Queensland. Industrial assets form the backbone of our communities, driving economic growth, creating jobs and supporting essential supply chains. They play a pivotal role in strengthening local economies and building resilient, connected communities. With its growing population, record infrastructure spending and the looming 2032 Olympics, Brighter Super believes that Queensland has enormous potential to deliver fantastic returns for investors and the Queensland economy, whilst underpinning jobs and driving growth in our home state. Mark is going to touch on that in more detail shortly, but you can also read more about our Queensland investment strategy on our website. We don't do what we do for the awards, but we do know that they give you, our members, confidence. So I was particularly delighted to win the Super Ratings Member Education Award for 2025. This recognises the focus that we place on helping members understand and take full advantage of their superannuation. And I'm pleased to say that we've also been named a finalist in this category for the 2026 awards, with the winner announced later on this month. And as I mentioned earlier, I was absolutely thrilled that we were one of just 6 funds to be recognised for the Epic Retirement Tick. Some additional industry recognition in 2024-25 included Money Magazine's Best Growth Pension Product and Best Cash Super Product in its 2025 Best of the Best Awards, Super Ratings Platinum rating for our accumulation and pension accounts for the 17th year in a row, and a 5-star rating for outstanding value from CanStar for our Brighter Super pension. As a fund dedicated to helping members retire well, Brighter Super continues to invest in education, advice and retirement solutions, including the Retire Easy Pension, the Retirement Reward and a team of superannuation specialists across the state. The enhancements that we've made in these areas have helped to significantly reduce complaints by over 62% between 2023-24 and 2024-25 and increase member satisfaction and advocacy. As we look ahead to 2026, we're continuing to evolve our offering of a simplified, value-for-money product suite, including work already underway to redesign our insurance offer and further enhance our investment menu. Together, we will continue building a brighter future for members for the next 60 years and beyond. Thank you to all of our members for your continued confidence in us. It is a privilege to help you build a brighter future and support you on your journey to and through retirement. But before I finish, I would like to take a moment to acknowledge two wonderful people who have been instrumental in Brighter Super's success over the past several years and who will soon be stepping into the next exciting chapter of their lives, a well-earned retirement after many years of dedicated service. Mark Ryder, who you're about to hear from, joined Brighter Super as Chief Investment Officer in February 2022. He brought with him around 40 years of experience in the financial services industry and demonstrated that experience and expertise from day one. He's guided Brighter Super through a period of significant growth and consistently delivered strong returns for members, all while managing the challenges of global market volatility, increasing inflation, rising interest rates, and global tensions. Some of the highlights of Mark's tenure include leading a team of investment professionals that have significantly improved investment outcomes for members, developing our Queensland investment strategy, which will invest an additional $500 million in Queensland assets, helping to enhance our members' communities and create jobs, as well as deliver great returns, and encouraging members to keep calm and stay the course during periods of market volatility, as staying invested is always the best long-term strategy. Whilst one of our members at a recent event suggested that Mark should run for Treasurer, he is instead planning the next phase of his life and career, exploring non-executive opportunities, including board and advisory roles. He also plans to dedicate more time to his family after the arrival of his first grandchild last year, along with volunteering and personal interests, which include an ambition to run a marathon. We will miss his leadership, but members can be assured that their investments remain in safe hands. Mark has built a highly skilled team of investment professionals with significant experience in asset allocation and manager selection, and with a clear and disciplined investment philosophy. The team will continue to deliver the same high-quality performance and care for our members well into the future. On behalf of the Brighter Super team, I do want to thank Mark for his wonderful contribution to our business and wish him all the very best for his bright future. And you've already heard that this annual members' meeting will be the last for John Smith, the chair of Brighter Super's Board of Directors. After 12 years of outstanding leadership and many significant achievements, John is retiring from the Brighter Super board on the 1st of December 2025. During his time on the board, John has been tireless in his efforts to deliver for members and ensure that Brighter Super performs our responsibilities in a proper, effective and efficient way. I do feel privileged to have worked closely with John since my appointment in April 2018. His extraordinary leadership and steady hand have been vital as we've navigated 4 strategic mergers over recent years, ultimately growing Brighter Super to become one of Australia's leading member-owned superannuation funds. Through this growth and in an environment of increasing regulatory oversight, John has been instrumental in embedding strong member-focused governance. He led the fund's efforts to realise our newfound benefits of scale to deliver operational efficiencies, enhance services for members, lower fees, improve digital access and robust cyber protections. John will leave a strong legacy of resilience, growth and unwavering focus on helping members lead confidently through every stage of life. John's currently working on an orderly leadership transition, including the appointment of a new chair, our current deputy chair, Ron Dewhurst, who's over in the corner here, so please say hi to him on the way out. Ron joined the board as an independent director in 2018 and has added incredible value to our journey over the last 7 years. So Ron will be taking over the reins from John in December 2025. Until then, and on behalf of the entire executive team, I do sincerely want to thank John for his wisdom, partnership, leadership and outstanding contribution to Brighter Super. Thank you, John. All right, to everybody in the room and online, thank you for your attendance. We're really proud to be your fund and we'll continue to be right by your side. I will be here later if you'd like to chat, but for now I'm going to hand over to Mark Ryder for an investment update. Thank you.
Thanks, Kate, and good afternoon, everyone. It's a pleasure to be here today to talk about your super and pension investments with Brighter Super. I'll cover 4 areas this afternoon. I'm going to start talking about investment performance in the last financial year, as well as the longer term. I'll discuss the key market and economic trends that drove your investments over the past year, and take you through our approach to investment and highlight some of the companies and assets that you are part owners of. And I'll conclude on some thoughts for the year ahead. So, how have your investments performed? John touched on a couple of the highlights earlier, but I'll provide more detailed commentary to you now. I'm pleased to say that in the past financial year, we saw a very strong performance across our investment options. Our default My Super option returned 10.89% in the year to June 25 and 7.23% over 10 years. The balanced pension option returned 11.49% in fiscal year 25 and 9.2% over the past 7 years. This chart shows the path of My Super over the past decade. A 7.23% per annum return over 10 years means if you invested $10,000 10 years ago, it'd be worth $20,000 now. It's doubled. This chart shows the payoff from strong long-run returns, but it's not without its ups and downs, as you can see. It's important to stay focused on the long-term nature of these investments. This slide shows 1 and 3 year performance for all of our diversified accumulation options versus peers. First, I need to provide some important disclosures about this table. First of all funds are ranked in their SR category of major funds in the Super Rating Survey, indicated by a star when they are ranked by the relevant all fund comparison instead. Brighter Super returns are reported on the basis of soft close valuations, net of investment manager fees, net of taxes, but gross of member-specific account management fees. Past performance is not a reliable indicator of future performance. In summary, it shows that in the last few years, we've seen very strong performance across almost all of our investment options versus peers. My Super's 10.26% over 3 years puts it in the top quartile of the major 50 funds in the Super Rating My Super survey. All of our accumulation and pension diversified options are ranked in the top 10 over 3 years. Accumulation, conservative balanced and pension index balance both rank number 1 over 3 years. But before looking more closely at recent performance, I'm going to overview our approach to our approach to your investments and show you some examples on investment options. At Brighter Super, we have a range of investment options, with most members' savings invested in diversified multi-manager options. Our options contain a mixture of asset classes ranging from listed shares to property and infrastructure, holdings in private companies not listed on the stock exchange, bonds and other debt securities issued by governments and companies, and cash as well. Our aim is to grow your super or pension balance while providing consistent returns. We build genuinely diversified portfolios, embracing investment risk where we believe it best delivers returns. We carefully consider fees and costs to ensure value for money. Our key focus is on you, our members, and what is in your best financial interest. We assess and analyse future risks, both traditional and those with environmental, social and governance considerations like climate change. This is why we believe in building a sustainable future under our 4 sustainable investment principles. Must be in the best financial interests of members, must have negligible negative impact on investment risk and returns, must be genuine in both intent and outcomes, and must not solely rely on divesting assets. All of our investments are value, not values based. This means we will not invest in an asset just on ethical grounds. Climate and ESG risk more broadly pose future risks to performance and are factors we, along with our managers, consider along with more traditional risks. Brighter Super's sustainability report outlines our commitments to responsible investing, including progressive reductions in carbon emissions exposures in our investment portfolio. Brighter Super is committed to environmental, social and governance responsibility, and our sustainability report also details information about measures we are taking to be a good corporate citizen. You can download a copy of the report on our website. Now I'm going to look at the investment options we have on offer. Everyone is different. It may be the stage of life or it may be their risk appetite. At Brighter Super, we have a range of options to suit members, from the more secure, in the yellow on the left, to the higher risk but potential for higher return options on the right in green, as well as the more diversified options in the middle in blue. The key difference in our options comes down to their strategic asset allocation, also known as the SAA. This is the benchmark allocation we make to each asset class. This chart here is for MySuper. It has an SAA of 24% for Australian shares, which is in yellow, 32.5% for international, which is in the purple. But it has smaller holdings in defensive asset classes such as cash and fixed income. The weighting of these is the critical difference across the options. For example, for those members who are in the stable option, you'll find that their allocation to shares is significantly lower, with a total of 23% in shares, but with much higher holdings in cash and fixed income. With this chart, this shows that over the past year, all asset classes have posted positive returns, particularly Australian and global shares, which have the largest weights in the MySuper fund. Another perspective on your investments is to dig down into what specific companies and assets you're a part owner in. At the overall Brighter Super fund level, assets are almost split 50-50 between Australia and the rest of the world. Of that 50% rest of the world, 30% is the United States. Looking at Australia, in Australia almost half is in Australian listed shares. Some of the large companies are listed on this slide there on the left, most of which I'm sure you know: Commonwealth Bank, QBE Insurance, BHP, Wesfarmers, owner of Bunnings, Qantas and Telstra. Private equity and real assets comprise almost a further 20%. That's the middle column there. You may be less familiar with all these names because they refer to specific assets or smaller companies. For example, Pace Farms is one of Australia's leading egg producers. Commercial properties such as 41 George Street in Brisbane is a conversion underway from an office to student accommodation. And if we look down in Melbourne, there's the iconic Collins Place. However, I'm sure that you are very much aware of Sunshine Coast Airport as one of the fund's major assets. In cash and debt investments, which is 30% of the total, federal and state government bonds make up a good share of these investments, along with bonds and lending to large and small Australian companies, including banks. The $1 billion Queensland assets that Kate spoke about earlier is 6% of the fund's total assets and currently spread largely across real assets, both property and infrastructure. And the other half of the fund's assets are spread around the rest of the world. Almost 2/3 of these assets are in listed shares. This slide shows some of the major holdings that you have. On the left, the companies there, I'm sure you all know and heard of: Amazon, Spotify, JP Morgan, and Nestle, just to name a few. Or you might have at least heard of NVIDIA, the leader of the AI pack and the world's biggest company by market capitalisation at around 6.5 trillion Aussie dollars, which, to put it in perspective, is more than double the whole market capitalisation of the ASX. Private equity and real assets is another 20% of the total. Once again, it's made up of smaller, less well-known companies and assets across a range of sectors. For example, Velocity Clinical Research is a leading global drug and medical device research company. We also have Nordic Data Centre, Verne, Spanish and Portuguese wind farm Fenerge, and we also have US fibre-to-home internet company Lumos. One day you may find that some of these less well-known companies migrate to the listed market. The cash and debt investments, as was the case in Australia, is dominated by lending to governments around the world, in this case, with bonds and lending to large and small foreign companies. So when looking at your portfolio in summary, you have a range of exposure to some of Australia and the world's leading and upcoming companies, along with investments in critical infrastructure and property assets. You are also lending money to governments, corporates and financial institutions around the world and at home. As Kate mentioned earlier, Brighter Super is diversifying further into investments that are both nation building and superannuation building, with an additional $500 million being invested into Queensland over the next few years. We have entered partnerships with global management firm Barings, the Queensland Investment Corporation, QIC, and Repairing Capital Partners to secure high-quality opportunities across multiple sectors. In property, Barings has begun investing in Queensland's industrial property sector, where we see strong long-term demand driven by economic and population growth. In private equity with QIC, we are backing innovative early-stage companies based in Queensland that have strong growth potential and can contribute to the future economy of Queensland. In agriculture, the Repairing Capital Partners portfolio, we are investing in agriculture, one of Queensland's foundational industries, helping build a financially sustainable future for this vital sector. These investments will provide a diversified spread across asset classes and industries, helping to deliver long-term returns for members while also supporting Queensland's economic development. Now I want to spend some time looking further into the key trends in markets and economies that impacted your superannuation and pension investments in the last financial year, and many of these are still relevant for the period ahead. Well, as you've heard, fiscal year 24-25 was another strong year of returns. It was not without its challenges. The new US administration challenged financial markets with an on-again, off-again tariff policy and change agenda. More on that soon. While in Australia, the Albanese government was returned to power at home, we also saw war continued in both the Middle East and Ukraine. But markets were supported by a falling trend in inflation and cuts in interest rates by central banks, such as the RBA. And despite fears of a sharper slowdown, the domestic and global economy continued to grow, but at a subdued pace, with unemployment remaining low and not far from multi-decade lows. But last year was really a year of two halves. In the first half of the year, markets continued to track higher on signs of interest rate relief as inflation fell. But that all changed at the start of the year with the tariff war. This slide provides a recap of what happened and where we're at the moment. It started not long after the President's inauguration with some country and sector-specific tariffs in early 2025. Then there was the 2nd of April US Liberation Day and the announcement of the so-called reciprocal tariffs. The table on the right here is one of the props the US President used to list the tariffs he wanted to impose. But then after a violent market reaction, these tariffs were put on pause for 90 days to allow negotiations to take place, which pushed this stage into the current financial year. As it turned out, few agreements eventuated, and tariffs were simply imposed by the US. China and the US have an agreement of sort, but it looks like a fragile peace. Yale University estimate that as at the end of July, US tariffs have increased by 15.9% in total, putting the current overall tariff rate at 18.3%, the highest since the 1930s. The next few charts will show you how financial markets and your superannuation have reacted to these events. This chart shows the performance of the Australian and US share markets over the past year. The left-hand axis shows the percent change in the US S&P 500, the red line, and the ASX 300, the blue line, since the 30th of June 2024. What it shows is that despite the weakness in both Australian and US share markets in reaction to the news on tariffs, both markets more than recovered this fall to post strong gains for the year as a whole. You can see the sharp rise in the US and Australian share markets following news of a pause on higher tariffs and the opening up of negotiations for many countries. On the 9th of April, the US share market rose 9.5% and has been rising since that date. That's great that share markets perform so well, but what about other asset classes? This chart here actually shows the interest rate that the US government borrows at, the US 10-year bond yield rate. What it shows is that it has been volatile, but generally been flat at around 1.3%. Interest rates rose late last year on expectation of a stronger economy on the back of a change in US president. Then they've eased back so far this year as the Federal Reserve in the US cut interest rates as growth slowed and inflation declined. And talking about overseas, how's the Aussie dollar going? Well, this chart shows that after drifting down in the second half of last calendar year, the $8 has been trending higher so far in 2025. It did fall sharply in early April, as is usually the case when markets get the wobbles and the world seems a riskier place. But it has since more than reversed the sharp decline as trade tensions eased and the US dollar began to fall against most currencies. So, circling back to the investment outcomes, members who didn't panic and rode out the volatility should have done quite well, as we can see in this chart. Again, looking at the MySuper option, you can see how our largest diversified option performed last financial year with a return of 10.89%. At the 30th of June, the option had more than recovered the weakness in the February to April period, up by 1.7%. The table on the right shows that all of our investment options recovered any earlier losses. Through this volatile period, our more defensive options, stable and secure, performed the best. It's important to remember super is a long-run investment. The 7-year chart of MySuper provides another perspective of the volatility. Over the longer period, it appears to be nowhere near as significant. Over this time period, the options returned 58.6% since mid-2018, an annualised 7% return. Remaining invested over this period paid off. The volatility that we've seen in markets, which we always get quite regularly, can lead to a desire for a more defensive strategy, such as investing in the cash option. Oops, go back one. This chart compares the returns over 7 years of cash, the red line, and MySuper, the blue line. While cash has a lot lower volatility, the return difference over the 7 years is more than 40%. Once again, it paid to remain invested in MySuper. So, looking ahead, gazing to the crystal ball. Since the end of last financial year, the positive trend in share markets in our investment options has continued. As we can see here, and I've highlighted it, the current financial year in grey through to end October. By the end of October, MySuper has returned 5% financial year to date, giving a return of 11.8% over the past year. The box on the right shows the return in our accumulation investment option since the peak in mid-February. This sustained positive trend we've seen in the second half of the year reflects a combination of factors. Firstly, the market has adopted a TARCO perspective of government policy in the US. That is, the US president always chickens out. It assumes that while the president may push policy hard in one direction, he will pivot and make a tactical retreat when markets respond adversely. In the past 6 months, the markets looked straight through the trade negotiations since April and pushed the market higher. Secondly, the US Federal Reserve has lowered its key Fed funds rate, interest rate by 1.5% to 4% as inflation has fallen and the economy slowed. Don't fight the Fed is another motto the market is following. That is, If the Fed's cutting rates, that's good for the economy and it'll be good for the share market. Thirdly, technology stocks have continued to rally, up 50% since their low point in April, driven by AI-related stocks such as Nvidia, which has doubled since its April low. Fourthly, the Australian share market has been swept along in the trend of positive share market sentiment and RBA rate cuts. However, we see complacency building in markets on a number of fronts at the moment. Share market valuations are historically high. Rapid earnings growth global in the AI tech sector has supported global shares, but there are limits to this. Rapid earnings growth has certainly not been a driver of the ASX rally, as earnings have fallen over the past 3 years. A lot of good news, we believe, is priced in. But elevated valuations alone is rarely enough to end a bull market. Other surprising factors are needed, such as disappointing economic and profit growth or higher interest rates due to inflation being too high. We are beginning to become more cautious in how we are positioning our options, while continuing to make it more resilient to ride out tougher times. We've been trimming the share exposure following a number of years of double-digit returns, increasing exposure to infrastructure due to its more defensive growth characteristics with inflation hedging potential. We've been moving back into property, an asset class that has actually fallen and value has emerged. We've also been building up our cash and fixed income exposures. Our objective is to build a truly diversified portfolio of assets, one that can help moderate the inevitable ups and downs in financial markets while providing the returns you need to build your retirement nest egg. In conclusion, I've been honoured to be your Chief Investment Officer over the past 4 years. I've enjoyed the challenge of forming what we now know as Brighter Super, the investments, the team, the culture, and of course you, our members. I'm confident as I retire that the fund is in great hands with Ron, Kate, our wonderful investment team, the rest of the executive leadership team and staff, and I'm sure that they're all up for the challenges ahead to ensure you continue your journey to your brighter retirement. Thank you.
Well, thank you very much, Mark, I should say. We move now on to question time, and we will open the floor. Just a reminder that you have John, Kate and Mark available to answer your questions. And we received a large number of questions prior to the meeting, and we greatly appreciate the interest from you, our members. We mightn't get to all the questions today, but we will respond to your questions alongside any that are submitted today through the webinar live stream in the coming weeks. And if your question relates more specifically to your own circumstances or how your super account works, then we suggest talking to one of our team here today who can provide you with a more detailed and probably useful response. So time's a bit limited today, and I apologise if we don't cover everyone's questions in the time allowed. We will aim to answer one question per member, but if we can't respond to your question within 2 or 3 minutes, we will follow up with you personally at the conclusion of the meeting. If you do have a question, please raise your hand and wait for a member of the team to bring a microphone to you. But to kick things off, we're going to start with some of the pre-submitted questions, and thank you to those who've submitted those. And this first one is for you, Kate, and it comes from Robert, who has asked, can I access my super at 60?
Thanks very much, Robert, for that question. So turning 60 is an incredibly important milestone from a superannuation perspective, because that's your preservation age and when you might be first eligible to actually start accessing your super. If you change your employment arrangements, your job after 60, if you permanently retire after reaching that preservation age, or if you turn 65, you can open a Brighter Super pension account, which we've spoken about today, and you won't pay any tax on your investment earnings. Importantly, we spoke about webinars today, so we do have a webinar on the benefits of a pension account next week. And if you wanted to register for that or find out the details, please visit our website.
Thank you very much, Kate. Robert must have been born about the same time as Brighter Super was, actually, so there we go. Another one for you. Maxwell and Ray have both asked, what are the current fees and charges, please, Kate?
Yes, again, thank you for the question. We do work very hard on fees. We know they're very important to members. So our percentage-based administration fee has reduced from 0.18% to 0.14% of a member's account balance. which means that more of your contributions will actually go to saving for your retirement. What it actually means in tangible terms is that the percentage-based administration fee for a member with a $250,000 balance is now $350 a year, down from $450. In addition, the annual cap on the percentage-based administration fee was also reduced from $900 down to $650, and I did mention that you can even spread that out across multiple accounts if you engage in partner linking.
Beautiful, thank you very much. Now from Graham, how is Brighter Super defending our investments from trade wars and possible military conflicts? A pretty good question for you, Mark.
Yeah, thanks, Graham, for that question. As I probably at the end of my presentation ran through, we've been working over a period of time now to actually build a more resilient portfolio, one which can take shocks and actually come through them as well as it can. And one of the ways we've been doing that is we've been decreasing just reliance on share markets, which can be very volatile and which are increasingly getting somewhat stretched on a valuation sense, and moving the portfolio into areas such as infrastructure, which bring about something a bit different. The way I referred to it earlier was its sort of defensive growth, inflation, hedging potential, some of the type of things that I think you want in that type of environment when you get shocks such as trade wars and military conflicts. And so, and probably a bit closer to what happened this year, as we were building that resilience, we did actually decrease our exposure earlier this year in the lead up to Liberation Day, and then we're able to take the opportunity when the market fell very sharply then to actually buy back in. There's a longer term and some shorter term things we've been doing.
Thank you for that, Mark. Do we have questions from the floor? If you put your hand up, we'll get someone to you with a microphone and you'll be able to ask your question in just a moment. So do please pop your hand up if you'd like to ask a question here in the room. In the meantime, Stuart has asked, perhaps for you, Kate, what value is there in spending member funds on high-profile celebrities such as David Koch?
Yeah, thanks very much for that question, Stuart. We do get that quite frequently, actually. So look, Kochie is our retirement advocate, as I said, and he brings with him not only a wealth of sort of financial knowledge and also great communication skills, but a real passion for going out and seeking advice. So our intention when we undertook our relationship with David Koch was that he would help us to engage members and thereby lift your financial literacy and help members who attended to make informed decisions about retirement savings. So this year with David, members have enjoyed very exclusive and quite intimate, I have to say, seminars and webinars where they've been able to gain valuable insights into retirement. He's talked about that, superannuation, investment strategies, and also some of the non-financial elements associated with retirement. It is actually having a real impact. So far, the average attendance per event is up 36% compared to our average attendance in 2023. So when you consider that he didn't attend every one of our seminars and webinars, that's actually a very, very substantial contribution. And there's also been a very significant increase in the intentions to go and get advice. So the relationship with David Koch is doing what it was intended to do and making members more engaged and more interested in finding out more about their personal situations.
Absolutely, thank you. And apologies to people here today who came expecting to see Kochie and got me instead. Mark, a question for you from Stephen. Jamie Dimon, the CEO of JP Morgan, is worried there might be another major stock market collapse due in the next 6 to 12 months because of the incredible amounts that are being pumped into technology and AI. What's the Brighter Super view on that?
Look, there's no doubt the share markets overseas and to a much lesser extent here have been driven by a boom in technology. I mentioned NVIDIA earlier, with the largest stock in the world producing the chips used for AI, and it's also spreads out into other parts, whether it can also be power, or it can be actually into data centers and the like. So there's no risk that there is a risk that really that this rise in price can keep on going. I think we're very much aware and alert to the risks, I've been around for a while. I've seen past periods of exuberance in markets, and there are some signs coming through on that. So we're very aware of the risks, and as I said earlier, we're looking to build that portfolio. We have been building portfolio to be more resilient, so that if something does happen down the track, that we're ready for it.
Does that mean you steer clear of some of those areas that particularly benefit in there? I'm thinking of crypto in particular, which I'm sure people are thinking about, and the remarkable returns there. But it is a bit of a wild west, isn't it?
It's interesting, like when you look at one of the things about crypto was meant to be something a bit different, but all it does seem to be at the moment is just it moves like the share market, but just is a lot more volatile. So it's certainly not serving that part of what it was meant to do.
Thank you for that. For you, Kate, Morris has asked, how do I change a beneficiary from non-binding to binding?
Yeah, this is a really important question and one that we've done a lot of work on this year. So the easiest way to update your binding beneficiary nomination is to log into your member online and you select the beneficiary tile on the left-hand side to nominate your non-lapsing binding nomination. So we've got this new digital process, which is much easier. It doesn't lapse and it doesn't require witnesses. And in the end, it's a much better outcome for beneficiaries. In ASIC's recent review into death claims handling in superannuation, they did report that claims with binding nominations were processed much faster than claims with non-binding nominations or no nominations. So very much encourage you to go and make sure that you have your non-lapsing binding nomination in place.
Thanks, Kate. Do we have any questions from the floor? We do, the gentleman there. And I'll come to you in just a moment, if that's okay. Just a quick one for you, Kate from Kerry. What arrangements has the industry, and in particular BRIDA, of course, made with the ACCC regarding the new digital ID legislation and its application for the superannuation industry, particularly for policyholders who either cannot or will not comply?
Yes, thanks for that. Very specific question. So BRIDA Super is broadly supportive of implementing a digital ID verification system in Australia, provided, in our view, that the system remains voluntary for use by individuals and acceptance by relying parties, and that the risks are appropriately managed to ensure a very robust and consistent system. So BRIDA Super is monitoring the expansion of the system to enable private sector entities to apply to participate, and will engage with the ACCC and OAIC either directly or through our industry bodies, and there are a number of those working on it at present as appropriate. Thank you.
Thank you. Now let's get to the gentleman here in the middle. Good afternoon.
Thank you for this presentation. If I call BRIDA Super, the call centre consultant that I answers my call, is that someone in Brisbane? It's someone not offshore?
Yes, that is correct. So thank you for the question. We've worked very hard to make sure that we ourselves offer services directly to members. So our contact centre is onshore. It is in Brisbane. We actually have our contact centre manager down the end. I think I saw David. There he is. He's waving at present in the audience today. So please go and talk to him about any of your thoughts or concerns. That would be great.
Thank you for the question. It's a good question too, keeping employment here in the Sunshine State. Do we have more questions from the floor, please? We do? Yes, over here. Good afternoon, sir. Go right ahead.
Yes, just a query about time frame of if you want to move your super away from superannuation to another institution like a bank account or whatever, what's the time frame there, approximately?
We do have some legislative SLAs if you put in a sort of a standard rollover request, and I think it's 3 days. Yes, it is 3 days. There's nods.
Thank you for the question. Yes, look, yeah, go ahead.
And is it got to be done in paperwork, or can you do it like...
Online?
It can
well,
be done
not online so much. I could ring up and say I want to do such and such. Would I have to fill in some forms, would I?
I don't think we can do it just verbally, can we? I'm looking at Rebecca here. You've got the...
Depending on if you're closing your account as well, so there can be some complexities with... Well, it's not complex, but there are ways that we have to handle that. So if you like, come up and chat with one of us after this and we'll give you the instructions on how to go through that.
Thank you for the question. Do we have more questions here in the room, please? Any further hands up? No? Okay. Just one more to go then. For you, Kate, if you wouldn't mind, the final question for the day. Too many stories in the news for a lot of people's comfort, I'm sure, about cybersecurity. What sort of steps has Brighter Super been taking in this space to ensure not just members' funds, but obviously the privacy and security of members' personal data?
Yes, thank you very much. And we do have our Chief Technology Officer, Randy, in the room today. So if you want to go and sort of ask about that in detail, he can certainly talk to you in a lot of detail about what we're doing. Scams are evolving fast, but keeping your data and your superannuation safe is actually our absolute highest priority. We use a whole lot of different layers of security systems and processes to detect and prevent fraudulent activity, including advanced cybersecurity controls, fraud prevention measures, regular security audits, and strict internal protocols. So a lot of different layers, actually, of support that we provide around your data and around your superannuation. I think I mentioned earlier that Brighter Super was also a very early adopter of multi-factor authentication, which you tend to see in a lot of different applications now. So that two-step process adds an extra layer of protection against unauthorised access across our digital channels, supporting Member Online and the Brighter Super app. And I think it's important to note that in terms of the industry hacking incident, the credential stuffing incident that occurred earlier in the year, we were very well protected, and our work sort of suggested to us that we were avoided because we had so many different layers of protection around your data and your superannuation.
That's particularly comforting. Thank you, Kate. All right, just a quick check. Do we have any more questions here in the room? We do. Gentleman in the middle over here, if we could, please.
Hang on, I'll come around. I'm racing you.
They're fighting over you, sir.
Here I come.
Good afternoon.
Thank you. Good afternoon. Just a quick question. Kate, this is a bit of a curved ball. You mentioned earlier that there's a nice little bonus for someone moving from accumulation onto pension. Any chance of some of us older guys who didn't get that benefiting from it?
Your name's not Don, is it?
Look, the structure of the retirement reward is actually built into the way we run our investments, from the accumulation phase and how it goes into the pension phase. So unfortunately, we can't do that. We can't apply it retrospectively. It's an amount that actually has to be built up while you're in the accumulation phase. Thank you for the question.
Thank you for the question. All right, are we all done from the floor here? I believe so. All right, well, thank you very much, and thank you to people who submitted questions that we've incorporated into the presentations, but also as part of the Q&A. Please remember that the Brighter Super team will be available to answer your questions here in the room afterwards. And for those who pre-submitted a question that we haven't got to, or who have asked one online today, the team will be in contact with you in the coming weeks. Thank you to all our members for attending this year's annual members meeting. We'll have today's video and minutes of the meeting available online in the coming weeks. Please take a moment to fill in one of the feedback forms. There's one on your chair, but if you'd rather fill it out electronically, scan the QR code on top of the form. And for those online, you'll find a copy of the Year in Focus, the Annual Report, Reconciliation Action Plan and Sustainability Report, all on the Brighter Super website. And just a reminder that on your toolbar, you'll find that feedback survey where you can indicate if you would like a Brighter Super team member to contact you. So whether you are online or in the room with us today, we do greatly value your feedback, and I'd invite you to join us for some light refreshments. And thank you very much for joining us today.
And just for those members who are in the room, the red gifts, thank you. Would you like to talk?
I'll explain what this is. It is a pillow for a very, very, very small cat. You can keep it right by your side as you are watching the Ashes in the coming weeks and months. It's a hammock for your phone. It's a little phone hammock, so that's what that is for. And thank you for not throwing them at any of us here